Hi guys, my name is Ben. Welcome to the channel where I try to find you resource stocks that have several multiples of upside to create and grow your wealth. Today we'll be looking at Metalla royalty and streaming. Metalla is a high growth, well diversified, emerging mid tier royalty and streaming company. The royalty and streaming business is a favorite amongst investors. This model gives investors upside leverage to metal prices, but does not expose shareholders to the downside of increased production costs. Also, royalties and streams benefit when the operating company invests additional capital into the property, which increases the mine life or production with no extra investment from the royalty holder. A resource investor's dream come true. Metalla has been consistently growing their net asset value and portfolio of royalties over the years. Their already strong cash flow is set to dramatically increase over the next 3 years. But somehow, despite this growth, the company is trading at a steep discount to NAV. You can see this discount on this chart. The net asset value per share, the gold line, is around $7.70 per share, but the stock is only trading at around $4.18 a share, the orange line right now. So a significant discount. As you can see, the stock price or the orange line traded over the NAV for a couple of years. Most of the royalty companies do trade above their net asset value, so Metalla is trading at a discount compared to peers. Here's a look at some of their key holdings, showing 6 producing assets, giving the company significant diversification from where their cash flow is coming from. The cash flow is shown in gray. Management has a great track record of actively expanding their portfolio of assets every year now, currently at over 100 royalties and streams and still growing. Excellent job by management on this metric, creating increased exposure to mineral rights for shareholders every year. Metalla has also doubled the net asset value per share over the last years, as shown here with the gold line, outpacing their peers again. So management is again doing a great job here creating value for shareholders. At the bottom of the slide is the company's current and projected gold equivalent ounces per year, a fantastic growth profile of a CAGR of 39% for their gold equivalent ounces or GEOs coming up over the next 3 years. Industry leading growth here as well. We will take a look at the capital structure of the company. Metalla has 10 million in cash and 21.9 million in available debt, allowing the company to potentially grow their portfolio of streams and royalties without issuing more shares. The average analyst target is $7.52, and the stock is currently trading around 418, giving around an 80% upside from here. The new president, Jason Cho, put in $1 million of his own money into the company, so a very strong vote of confidence in the stock from the president. Looking at the 2 year price action of Metalla, the stock has come down and now has flattened out, forming a base over the last year. It looks fairly similar to most of the royalty and streaming company charts. Let's take a look at the broader investing landscape. Here's the main reason why I like the commodity space for investment right now. The chart is commodity prices divided by the S&P 500. The valuation of commodities is really low compared to stocks. The last couple of times we've seen this ratio this low, there was a big spike in commodity prices in 2000 and back in 1970. So I think commodities are a good bet here compared to the general stock market. Certainly, a rally in commodity prices would be beneficial to Metalla and other commodity stocks. Here's a chart of gold. You can see the price of gold breaking to new highs after yesterday's Fed meeting, showing some leadership of the other commodities. It looks like the train is leaving the station here. This is also will give a big tailwind to commodity stocks like Metalla. This looks like a great name for investors looking to get exposure to metals. Some of the key takeaways from the company are the royalty and streaming business model gives upside leverage to metal higher prices without the downside of increased production costs. Management have also steadily increased their portfolio of royalties and streams. Metalla is projected to more than double their gold equivalent ounces in the next 3 years, well ahead of their peers. This and all the company is still trading at a very significant discount to its NAV. Please do your own due diligence. This is not financial advice. Thanks for watching, and we will see you in the next video.